All right. Hi, everybody, and welcome back to my channel. This time we are talking about self-employed individuals, independent contractors, sole proprietors, anybody who files a Schedule C. We are talking about what they need to do to get their loan forgiven, their PPP loan forgiven. I had already done a video that was focused mostly on corporations and companies that have employees but also pay their owners, so that pay their owners through payroll. So that video is how to get your PPP loan forgiven, and that's linked below. So if you are not a Schedule C filer, maybe this video is not for you. You can go and find that other one in the description below. But if you are, this video finally is here for you. I know a lot of you have been asking for it, and so I am here to deliver. All right, so let's get started. The big difference between just a corporation filing for this and the Schedule C filer is that owners are fundamentally paid differently. So that's what we have to keep in mind when we're talking about payroll forgiveness, because this came out where people were like, well, I don't have payroll for myself. I just take owner's draws every week or every month or every quarter. And I don't have a pay stub to prove that I've been paying myself, but I obviously pay myself money because this is my source of income. So the Treasury has come out with rules, and the document that we're mostly going to be looking at for the purposes of interpretation in the spreadsheet sheet that I'm going to show you is the interim rule posted on April 14th, 2020. And this one has the most guidance for self-employed individuals. So if you do download my spreadsheet, because there is a spreadsheet available in the description below, you can click on it and get your version. It is on the Schedule C filing guidance, and the Schedule C filing spreadsheet is the third tab in. And then I do have a link to this interim rule in the spreadsheet, so you can find it really quick and easy there. So this one gives us the most, and sorry, I'm looking at my other screen over here. So if I'm going like this, that's what I'm doing. I'm looking at my other screen. So this one is going to give you the most guidance, and it did clarify, because when the CARES Act originally came out, it didn't have a whole lot of guidance for it. So that's what we're going to do. And that's why that's there. There's kind of two, well, let me say this first. There's two kinds of businesses that we're going to look at. The sole proprietor, that's just the sole proprietor, they don't have any employees, and then the sole proprietorship that also has employees on payroll. Okay, so we'll look at both. Let's go ahead and share screens. Okay, so like I said, this is the third tab in on my worksheet here, and this is that guidance in case you want to go and look it up yourself and double check me on the rules. Always do the research yourself, and this video is just meant to be educational to help support you and know what you need to watch out for. And definitely make sure you're subscribing to this channel, because things are changing and things are changing rapidly. I just recorded a video of something I had said earlier in a video is not the case anymore. So, or more guidance has come out that that's not the case. So I wanted to just make sure that that was really clear. This is constantly changing, so we're just keeping things updated. All right, so the way that this spreadsheet works is that we put our total PPP loan up here. So if you've received a PPP loan already, you put the total up here, and then it's going to calculate out for you your average payroll costs. Anything in teal is something that you should be changing, and then also anything white you can go ahead and fill out. So the way that I was thinking about this is I was thinking about, well, we need to start budgeting for these costs from the beginning, because what if you get to the end of your 8 weeks and you realize, like, wow, I didn't spend enough money to get enough forgiven, or maybe I spent money on the wrong things, and so your ratios are thrown off. So that's why we need to plan out our spending now, and that's why I've created this budget for you. All right, so the budget here is over on the side is that you can put in what you think you're going to spend over the next 8 weeks. And I've also put a date in here, and you would put in this box the date that you receive the funding in your bank account. That is your loan origination date. So I'm recording this on May 4th. So I'm just going to go ahead and put May 4th in here. All right, let's just give an example. So if I requested $20,000 for my PPP loan and my average payroll cost was $8,000, I'm going to first give you the example of what it would look like if I didn't have any employees. Okay, so I'm going to assume that over 8 weeks that my owner compensation is $16,000 because it's double average payroll costs. All right, so I'm going to explain real quick how we are calculating the compensation for owners. So if you file a Schedule C, what they want you to do is they want you to take your 2019 Schedule C. This is whether or not, this is when you were applying for it, you didn't necessarily have to have your Schedule C filed through the IRS yet. But now that we're going to be pushing up until June and maybe almost closer to July by the time you are actually applying for forgiveness, you're probably going to need your filed Schedule C. So I would go ahead during this period of time and try to get your taxes finished so that you can have a filed Schedule C and ready to go. They might be okay with one that hasn't been filed, but I would go ahead and just file it because it's good to know that number and have that final number anyway. So the way that you're going to calculate your owner's compensation is you're going to take your Schedule C, line 31, which is your net income, and then that's going to be divided by 52. And then multiplied times 8, so that you take your net income and you annualize it. So you're saying, okay, if I made $100,000 in 2019, then you break that down to what that would be on a weekly rate. And then you take that weekly rate and you multiply it times 8. So if you did make $100,000, that calculation ends up being $15,385, I believe. I've done that calculation a number of times. I did not just do that in my head. But once you calculate that amount is essentially like automatically forgiven. You don't have to transfer it weekly into a different bank account. You don't have to write your checks for that specific amount. That amount is going to be forgiven. You don't actually have to do anything to support that amount besides getting your Schedule C done. So look at that. I mean, why not just go ahead and do that? Because that is an automatic forgiveness. So the one thing I would say is that if you had a Schedule C business that made much more than 100,000 or more than 100,000, even if it was 101,000, you have to limit it to 100,000. So this is similar to on the corporate or on the employee side, you have to limit any employee wages to 100,000. We're doing the same thing because this is owner's compensation. We're basically saying, hey, your net profit, even if you made 200,000, we are still cutting it down to 100,000. Okay. I think that's all we need to know about that. But everybody's been asking, do I need to write my own checks, or do I need to write myself checks? Do I need to put this into a separate bank account? Do I need to shift it over and put it into my personal account on a regular cadence? And the answer is no, you don't have to. If you want to do that, you can, but there's no guidance. I mean, it just says you're going to have to show your Schedule C. So get your Schedule C done. Go ahead, talk to your tax accountant, get it done. You have 8 weeks to get a tax return done. That is not a problem. And then use the spreadsheet to budget, and you should be good to go. And then I'm just going to go ahead and kind of plan out, although I have this as actual spending, the first thing I want to do is just plan out what I think this is going to be. And then I can make a copy of this tab. You just right click on that and go move or copy, create a copy, check that little box, create a copy. And then you can track your actual spending in another spreadsheet if you want to do that. All right, but I'm just budgeting right now. And then we're going to skip over employees' gross wages. And so what's includable in payroll costs for a sole proprietorship is a little bit different than the corporations. So one thing that you cannot include is health insurance for the owners. So that might be something that you need to consider, because maybe you were thinking that was okay if you watched my other video. So no health insurance. So I've put that in here. So I tried to put some links and some documentation in these little comments too. So definitely check those out. So what you would include is, if you have employees, we'll talk about that later, gross wages, commissions, and then cash payments or tips. That type of stuff goes in here. Payments of vacation, sick, parental, and medical leave. And then health insurance for employees only, which in this example, we're not using. So retirement contributions for employees only. Again, not for business owners. Can't include it if it's just the owner paying themselves and they have no employees. But you might have, and you don't have any state and local taxes because you take an owner's draw and you don't have to pay payroll. So you don't have to do anything. So really in a situation that you have payroll costs as a sole proprietor, your only payroll cost is going to be this owner's compensation line. You're not really going to have anything else here, okay? But you might have some of these other items. So there's still allowable costs that you can use the PPP loans for. Some of the big caveats though is that all of these things have to have been in place or you had to be in some sort of obligation as of February 15th, 2020. So if you had rent, your lease would need to be in place as of that time, or any utilities that you might have would need to be in place at the same time. Mortgage interest, and this is not home mortgage interest. Even if you work from home, these all need to be expenses that you would be able to put on your Schedule C as a legitimate business expense. That is very key. That is said like multiple times when you're reading through this interim rule. It is very, very clear that these need to be business expenses that you would actually put on a Schedule C form, okay? Same with other debt interest. All right, so all of these allowable business interests, even if you work out of your house, they need to be legitimate business expenses. This is not the time to try to move expenses over to the business. I promise you that will not go well for you. That's not the intention of this act, okay? So for this, we're gonna go ahead and just assume that maybe there's some utilities that are legitimately for the business. Maybe there's an extra phone line or something like that. So we're gonna go ahead and put in a few extra costs. Let's see, transportation is covered. Maybe there's some transportation costs as well, like a work vehicle, gas for a work vehicle, something like that. Okay, so I'm gonna put in a little bit of extra cost there. And then maybe there is some debt interest on a old equipment loan or something like that. I'm gonna put that in here. All right, so let's just say that these are all now, and I'm gonna just assume that I budgeted for these costs. I know we went over budget here. All right. So in this situation, this would be kind of my plan. So if I had received 20,000, I know that I would be able to get back 16 because I am allowed to take 8 weeks of payroll, 8 weeks of payroll. And then I have some other allowable costs that I have here. And so this is calculating out to me what my total potentially forgivable amount is, and then the percentages here. One thing that's really important is that the interim rule and the Paycheck Protection Program always talks about payroll costs being the majority of what you spend your money on. So they do not want you to be spending most of your money on all of this, rent and everything. Some people have said, well, what if I don't spend any money on payroll and I use it all on rent because my rent's really high? Well, the problem with that is that it's going to throw off your ratios. Let's just say you had $5,000 here and $5,000 here. This would put your ratio at 40%, and then your payroll amount would be less than 60%. The problem with this is that this is not the intention of the rule. The intention of the rule is to compensate and be a paycheck replacement. And in this situation for a Schedule C filer, it is an owner's compensation replacement. So the intention is not for this bill to pay your rent. The extra 25% is just like an extra bonus. Hey, if you have some money left over, you can use it for these allowable costs. They want you to primarily use it on payroll first. So in this situation, this could potentially put you into a situation that it's not forgivable, okay? So we need to watch out for that. Don't make this, don't let this number get higher than 25%, all right? So we're gonna put that back to where it should be. All right, so this is looking pretty good right now. So in this situation, if you got to the end of your 8 weeks and you were like, okay, I spent $17,000 on things that I believe are forgivable, you can look up here and you can say, oh yes, 17,000. I don't have to reduce this for any full-time headcount because I don't have any employees. So you don't have to worry about that. And then let's see, loan amount after forgiveness is that basically the difference between your total loan and then your forgiveness amount. And then if you got an EIDL grant, which you didn't, you would put that in here. But basically, this is leaving you with a $3,000 loan, which you can either, if you had that $3,000 left over and you didn't want to hold on to it, you could just pay it back. And then you would have no loan portion left after you get your forgiveness of your $17,000, pay back your $3,000, you're good to go. Done. But if you wanted to hold on to it and pay yourself for the next couple months, because this would pay another week and then another half week, you can hold on to it, but then just know that that turns into, that is a loan amount. So you will have to pay that back over the course of the next 2 years. All right. And that's at 1% interest rate. So it might be worth it to keep it to you just for some extra liquidity, or pay it back if business is doing okay. One thing to keep in mind is that you will have some sort of tax effect with this money. So this is kind of interesting because you're not necessarily deducting these expenses. You're not paying yourself like payroll expenses on your Schedule C with this money, but it is becoming sort of extra profit directly to you. So you will be likely taxed on that profit. You will be taxed on that profit. And so what you want to do is go ahead and put in an effective tax rate. You can look at whatever last year your tax return was, find your effective tax rate, and then put that number in here. It's going to be probably somewhere between like 10 and 25%, somewhere in between there. And this just gives you an idea of maybe some extra tax liability that you might owe, and you know, it's something to plan for. If you're putting in estimated taxes during the year, you might want to consider this and not wait until you file your tax return next year to figure out what that number is. Just go ahead and sock some money away in your estimated taxes. All right. So that's that example. Let's change the scenario a little bit if you did have some employees. So let's just go ahead and assume that because you had employees, your PPP loan was $40,000. And so with your PPP loan being $40,000, I'm going to go ahead and just assume, that your payroll for employees is about $1,500 every week in gross wages. And then we're going to do a little bit. So let's just say you do actually do healthcare, pay healthcare for them. And maybe you do that monthly. So you put that in here. And then maybe you also have some retirement contributions that you do for them, which is very kind. Wonderful. And then a little bit of state and local taxes. I'm just going to do something like, I'm just trying to put some numbers in here to give you an example. Don't scrutinize my math too closely. All right, and let's just say too, like one of the things that was allowed was a stipend, but there are some costs that are not included. So if you have an HSA, that's not included. So far, workers' compensation has not been included, which I'm actually really surprised about, but hopefully that might get clarified down the road. But HSAs, FSAs, and workers' comp, and some of the other like fringe benefits like life insurance or disability, things like that have been specifically excluded, but not in any formal documentation. It's just been talked about that they've been excluded from what I can tell. I might be missing something, but there was something that said, there was one of the interim rules, and I think it was in an FAQ that said, can you include stipends? Like if you had maybe like a stipend for healthcare, or if you had a stipend for cell phone use or something like that. If you had something like that, that could be included as a payroll cost. So double check me on that one. I think, oh yeah, it was, I do have the link in here actually. If you look at my comment, it does have the link to that guidance. So I'm not going to include it here for this example, but I'm just going to put it as an option. All right, so this is putting me right now at close to 32,000 for payroll costs. So that puts me kind of at 2 months of payroll basically right now. All right. And then let's just say in this scenario, now that we have employees that we're factoring into the picture, let's also pretend like we also have some rent. So maybe rent is about $2,500 a month. And because we have an actual physical location, that probably means that we have some utilities or some other sort of electricity, or maybe garbage or cable, not cable. I don't think cable's included. Internet that has to be paid for here. Okay. All right. So in this situation, we've got similar allowable expenses. We've already gone through what that is, but now we have all these employee costs associated. But we still have that owner compensation that's still calculated the same way. And then allowable costs are down here. All right, so we're still good because we've still got our ratio of 82%. So we are over 75% here and under 25% here. So this is still a healthy ratio, and this would still be eligible for forgiveness. All right, so if we go up here, now we have, you can see that we have 38,000 of allowable funds that we've spent. And then, so there's going to be just a little teeny tiny bit of forgiveness that, that is not getting forgiven, that will turn into a loan. Now, what you'll see is that now that our loan amount has gotten a lot bigger, our estimated tax liability has gotten a lot bigger because we got a lot more money forgiven. So that's something really to consider, because this amount of money could be really hard for you to come up with at the end of the year when it's time to file your taxes. So this really needs to be planned for now so that you're saving all along the way, so you don't get hit with a big tax liability that maybe you weren't thinking about. All right. So factor that in. All right. Well, thank you, everybody. This has been, this spreadsheet has been really helpful for people. So make sure you download it in the description below, grab it for yourself, and then start filling out your numbers and really think through, like, what do you think is going to happen in the next 8 weeks? This money does need to be spent in that time. So check it out, make sure it's there. And then make sure that you're also keeping track of your documentation. Make sure you check out my video that's about saving documents specifically for documenting your forgiveness. And then let me know if you have any questions, put them in the comments below. Give me a thumbs up if you liked this video, thumbs down if you didn't like the video, and let me know what else you would like to see. And I would love to do more videos for you guys. All right, well, thank you, and make sure you subscribe, and I'll talk to you later. Bye.